Hey everyone, thanks for joining today. Really appreciate you taking time out. I'm Vishal, co-founder of Travel and Payments, and and the Payments Club, which she has very gracefully got us together. Today we'll be speaking with Jonatan, and Jonatan Allback. Of course, he's from Sweden. Keeps oscillating between South Africa and Netherlands. I met him when I was at Expedia and he was at Ardian. He was my relationship manager, and I on the other hand. So it was a good relationship. I should point that out for sure. But of course, after that, he's done a lot of things, and now he started a company called NjiaPay. Recently, NjiaPay got funded for $2+ million. So congratulations, Jonathan, on that.
Thank you.
Along with NjiaPay and Travel and Payments, today we are going to talk about African payments. We've heard of APAC payments, LATAM, US. All these are very unique, very different. But Africa is completely different altogether. In case you didn't know, Africa has the largest number of countries in the world as a continent. So definitely more diversity than anywhere else in the world. Before speaking much more, of course, we'll keep questions towards the end. We'll have at least 15 to 20 minutes for questions. But before we do that, Jonathan, I'll hand it over to you for helping us walk through your African safari.
Thanks, Vishal. We've come a long way since 2018. That was then more focused on the Southeast Asian market. So now we're going even further south to Africa. And you also already pointed it out that Africa is a continent and not a country. I can skip mentioning that. But we all know, guys, that payment might not be the most sexiest topics unless you appreciate ISO messages and scheme manuals and latency, etc. But so I'm trying to keep it lighthearted here, but I will structure this as pretty informative and educational, and it's one-on-one. So without further ado, let me share my screen. And as Vishal mentioned, question at the end, but if there is a strong need and urgency to ask, please raise your hand, because if not, I will be talking for 30 minutes or so. All right. African Payments 101. Today, we split it into 3 sections. First and foremost, I'm going to give you guys a high-level overview of the ecosystem in Africa. As Vishal mentioned, there is 54 sovereign nations across the continent. I will not go into each and every one of them. I'll touch on a few, but I will do a deep dive into South Africa. It's the largest economy on the continent. That's also where NjiaPay has its core focus. And I will be discussing some of the challenges, opportunity, and changes that are happening there. And then last but not least, I'll just share some of the larger companies that are trying to solve the challenges across the continent. First and foremost, guys, Africa is growing. Right now, over the past 10 years or so, has had an compounded annual growth rate of 37%, but there is still a number of challenges. As you can see here, over 350 million people are still unbanked. Card penetration is extremely low across the continent. Cross-border remittance is constantly happening, and mobile money is still the dominant force. I saw that we have Joshua from PowerPay. So PowerPay is a company that offers merchant of record for mobile money across the continent in over 20 markets. And he did not pay me to say that. But this is also one of the reasons why 70% of all mobile money in the world happens in Africa. And many people today might forget that M-Pesa, that started about 20 years ago, was the first mobile money operator. Today, people are talking about PIX and UPI, but forget that mobile money actually started in Africa. But don't get me wrong, there are some challenges across the continent. And as you can see, there are so many different providers that operate across the 50+ countries. And you have over 200 payment methods. So it's a very, very fragmented ecosystem. But today we'll share a little bit about each and every one of these challenges. First and foremost, let's just talk about cards. Cards globally is still the dominant way of paying. And I believe we are all familiar with this diagram here. This ecosystem still exists in Africa today, but cards is more the prestige rail. It's not your everyday African that is using cards. And cards are still fairly expensive for a lot of the local merchants. Outside of South Africa, most countries are not dominating with cards. South Africa has the highest population of banked citizens. So 80% of all South Africans have a bank account. Like credit cards is not very heavily used. It's still mainly debit cards. And the engines of the card payments are the legacy guys. ACI, CyberSource, and MPGS, MasterCard Payment Gateway Services, are the core processors for the acquirers in the continent. And we are seeing some challenges because of these global players operating in a local market, such as 3D Secure, latency and issues, fraud rules for some of these providers where shipping addresses doesn't really exist in a standard format. And although the card is very focused, and I believe I'm reading every other week or so that CyberSource or Visa and MasterCard strengthen a relationship with the bank, such as Prudential Bank in Ghana. They are still lagging behind. The good news is that there are some up-and-coming modern African fintechs and PSPs that are trying to do what the likes of Adyen, Checkout, and Stripe have done in the Western world, and that is bringing more high-tech in the cloud native technology to the continent. In addition to the international schemes, you do have local switches as well, which adds complexities. There are 30+ local switches. You have your BankServe in South Africa and NIBS in Nigeria. And these are the backbones of the domestic payment rails. They tend to be cheaper than the international rails, but they are struggling when it comes to cross-border processing with cards and uptime, to be honest. In South Africa, you are required to have an integration into BankServe to process roughly 10% of all cards via BankServe. In addition, you also have local rails. Some of the bigger one is Verve, owned by Interswitch in Nigeria. It's the largest domestic card scheme in Africa with 50 million cards in circulation. And over 5 billion in annual savings is the target for Verve. So think of Dankort in Denmark or Carte Bancaire in France. In addition to Verve, you also do have a more Pan-African initiative that is called PAPS, Pan-African Payments and Settlement Systems, that really want to focus on integrating all the different central bank systems into one. But as you can imagine, getting 54 central banks to agree is challenging. So currently there's about 20+ countries that are participating in PAPS today. And there are partnerships such as PesaLink and PAPS that are starting to play out, and I believe you will continue to see more and more of these collaborations happening. And in the future, 7 to 10 years, I am certain that the number of countries will grow, and this is definitely something to pay close attention to. And I was listening to a podcast by Wisa, the African fintech guy, a couple of weeks ago, and he was saying, I would love to be able to pay with my PAPS card in London, but I don't know if that will happen within this decade. Then mobile money, as mentioned, is heavily used. Some markets, you have anywhere between 60 and 80% market share. You see 3-to-1 account ratio between mobile money and traditional banks, and mobile money is actually serving in many places as the bank for these unbanked consumers. And another interesting worth mentioning is Wave recently introduced a very low fee that has put immense pressure on other mobile money operators. So now mobile money is actually more seamless and cheaper. And then you also have companies like M-Pesa moving on-chain and start offering virtual cards. They are trying to differentiate themselves and making sure that their consumers can use their services outside of just Kenya or their home country. Last but not least, open banking. And this is one area where I would argue that Africa is still lagging behind, although they are trying to catch up. And the regulators have not really been enforcing open banking in a lot of countries, but Nigeria is pushing it. They're now giving out specific licenses and are trying to encourage more banks to open up their APIs. And in South Africa, more and more of the banks are starting to launch their own open APIs to sort of drive usage. I'll talk about it more later. And for me, I mean, the biggest opportunity isn't just data, right? As you can see, it's from a cost perspective. And if you can start passing this cost on to the merchant, I truly believe that over the next 5 to 10 years, open banking payment methods will also start gaining traction. But for now, it is more around the user experience not being as good as it has to be. So this is why, for me, the big open question is, can open banking be the foundation of Africa's next fintech innovation? I know for everybody who's been involved in Europe over the past 10, 15 years, open banking was a great initiative, and that is now starting to slowly gaining traction, but it's not really gaining as much traction on the pay-in side of the house. It's more facilitating the bridge, and as I alluded to, the credit gap by facilitating real-time data between the various companies on the back end. So something to keep an eye on here. That's it, sort of on the African payments ecosystem side, more on the pay-in. Now I want to move on to South Africa. South Africa has a lot of different providers and also 2 different types of economies, which sometimes gets forgotten about. What I mean with that is you have your upper class, your digital native shopper. These are the ones who are heavily banked, sometimes even with more than one bank, and they are the ones who are using cards and embracing digital wallets, etc. But you also have the lower LSM. These are the informal economy, and depending on the data that you look at, this informal economy can be worth up to 100 billion. And South Africa's GDP is around 450 billion. And this informal economy is what's happening in the townships where cash is king. And 60% of these consumers are excluded from the formal economy today. And this is also where there is a massive opportunity within the South Africa economy. How do you move those consumers from the informal to the formal, where cash is no longer king? If you look at the competitive landscape in South Africa, over the past couple of decades, it has been dominated by the big four that has now turned into the big five, with Capitec being the latest one. You had your Absa, Standard Bank, FNB, and Nedbank really monopolizing and controlling the acquiring and the payments ecosystem for far too long. This is now slowly but surely changing. I'll talk about the regulatory landscape in a bit. But what has happened is you've had a number of agile PSPs popping up. PayFast and PayStack are more your SME to mid-market. Then you have Stitch and Peach, Stitch being one that has been growing crazy over the past 5 years and is really trying to become this full stack acquirer that is offering omni-channel capabilities as well. And Peach as well did an acquisition last year to get more in-store. So these are two providers to keep a close eye on. Stitch also acquired a processor last year as well. But then you also have your point of sale providers for the more SME store, such as Yoko and Ikoka. Think of Square or iSettle, that type. From a consumer base, as I mentioned, in South Africa, card is still the most dominant way of paying for the formal economy and for the higher end merchants. You also have account to account growing, and that's where Capitec and also more on the EFT side has been gaining a lot of traction over the past couple of years. And now the central bank is pushing an initiative called PayShap, which is trying to compete with the likes of Capitec and be more of the true account to account. Over the past couple of years, you also have seen an increase in buy now, pay later. And there is around 4 to 5 different buy now, pay later providers in South Africa. And this is gaining a massive uptake in the middle class, where you do have consumers who are now starting to earn good salary, but they don't feel or they don't have that credit history, so they don't want to get a credit card or they cannot get access to a credit card, but they can then start using buy now, pay later. Happy Pay, which is a fairly young fintech, sees a massive uptake in the working class female, sort of 30 to 50. That's what they have noticed as a sweet spot. That's really the class, middle class, that is now starting to use buy now, pay later a lot more in South Africa. And Capitec, as I mentioned, it's more of an open banking payment method. And they, for some consumers, are gaining a significant amount of traction. Some merchants that we work with, we see over 60% prefer to pay with Capitec Pay. And it's an open banking. It's a very simple 5-step process or 3-step process where you click Capitec, input your mobile phone, you authenticate it, and you're done. And Capitec is the largest bank by consumers with over 21 million in South Africa. What I also want to note around Capitec and the open banking space is that they are now starting to offer quite some innovative solutions, such as recurring payments using the open banking rails, as well as what they call an open API health check, where we can ping Capitec to check if Jonatan Allback would have funds on his account before sending that off to a payment. And this is because they want to try to reduce, of course, the amount that they are paying to the schemes, MasterCard in this case. Then switching more to the regulatory side. So last year, South Africa introduced what they call the Payments Ecosystem Modernization Program, as they call PEM. This was an initiative by the South African Reserve Bank to really try to modernize the national payment system and really upgrade and open it up to players outside of the traditional banking world. So what they did, they launched an acquiring designation that would allow certain fintechs and non-banks to participate in the clearing system. This was not the case before, which was why those big four and the big five completely dominated the payments and acquiring space in South Africa. This is also why you probably have not seen the entry from the likes of an Adyen, Stripe, or Checkout because of the challenges. So, of course, with these changes, I'm hopeful that some of those global players will eventually enter the market. And then last but not least, what they also introduced was more around the consumer protection, really trying to bring sort of the European GDPR standard to South Africa as well. What they've also been pushing and started to take more control of is PayShap. As I mentioned earlier, it's South Africa's answer to sort of account-to-account instant payments. And prior to last year, it was owned by the banks. Then the Reserve Bank decided to buy back a majority share of the entity to take more control and to regulate how it works in South Africa. Because one of the biggest challenges when they launched PayShap was, and still is, that each and every bank in South Africa has set their own fee structure. So in some cases, I as a sender will pay. In other instances, I as a receiver will pay. And the amount is slightly different bank per bank. It can vary that I can send 5,000 rands per day or 20,000 rands per day. So what they have now done is saying we're going to take more control because we feel that PayShap can become our PIX or UPI. And that's really the end goal of PayShap for the South African ecosystem. So in theory, great product. In practice, still has ways to go. Last bit of my presentation, as I mentioned, I want to cover some of the Pan-African payment powerhouses, as I call them. These are 5 players that are working across the continent in different shapes or forms. The ones that I pick and the one that I believe are worth mentioning is, of course, we all know or should know dLocal, global merchant record provider, Flutterwave, one of the largest PSPs in Africa, MTN, that's your telco. Onafric is more of an network infrastructure interoperability player. And then Tunes, even though they are headquartered in Singapore, they are heavily active in Africa as well, more on the cross-border payment side. So dLocal is known to work with some of the largest companies in the world in emerging markets. And Africa is no different. They work with the likes of Amazon, Spotify, Uber, across the continent. And of course, their sales pitch to some of these global large enterprises is one integration, access to over 900 methods across the globe. So they really act as that global bridge between the enterprises and emerging market. In Africa, no difference. What they also focus on is, of course, that pay-ins locally and then settlement outside of the countries that they are operating in. And here we are seeing them quite a bit in South Africa. But again, it is not your South African consumer or your South African companies that will work with them. It's all the global players. In addition to dLocal, Flutterwave. Flutterwave is probably the most recognizable PSP in Africa. They are operating in 30 plus countries across the continent, and they are really positioning themselves as the PSP for larger enterprises. And they are, in some cases, the PSP behind the likes of a dLocal. And they really are focused on a number of different products as well. So they really want to diversify themselves more than just your traditional PSP. So they now launched a B2C send product where diasporas and migrants living in the US can send funds back to their home country in Africa. However, if depending on how closely you've been following the African PSP landscape, you've also seen that Flutterwave has had its fair share of struggles and challenges when it comes to navigating the complex licensing across the continent. And this is one of the biggest hurdles for a lot of the payment companies across the continent. It comes down to licensing. Just the other week, Rwanda and Kenya announced as a partnership to allow fintechs to passport licenses across the border. And this is really something that is missing in Africa. In order for South African businesses to operate outside of their border, they need local licenses versus the likes of Europe, where you can get an Irish banking license or Estonian banking license or Dutch payments license, and then you can passport that across multiple borders. And this is one of the challenges that Flutterwave, as the leader, is also struggling with. Then MTN. MTN is your telco bank. It's one of the largest mobile money operators and serves in 16 plus markets, has over 60 to 70 million active monthly users and a processing over 100 billions. And it's a real P2P transfer. And this is really, as I mentioned earlier, one of these Pan-African providers that are gaining a significant amount of traction outside of your typical cards. And it is really a competition for with the banks to a certain extent for those unbanked providers. But there's also, of course, licensing requirements here and some challenges. And they are in certain markets struggling, but in other markets gaining a lot of traction. And last but not least, what's also interesting to see here is similar to M-Pesa, they themselves are also now starting to work with the likes of Visa and MasterCard to figure out how can their consumer base use their solutions outside of just their home country. And then a fourth player that I want to highlight is OnAfric. And this is really the one Africa They were formerly known as MFS Africa, so Mobile Financial Services, but then rebranded to OnAfric, which stands for One Africa. What they are really trying to do is connect all of the mobile money operators and schemes across the continent. So they can allow a user in Kenya to send funds to a user in Ghana, even if they're not on the same networks. And that's really sort of their focus, is to be the network of networks. And really enabling that seamless cross-border money movement, and that is much needed in a place like Africa, because you have people in South Africa, for example, from Zimbabwe, being the breadwinner for their families back in Zimbabwe, or workers in Middle East sending funds back home to Kenya, etc. And as you can see here as well, OnAfric is also now expanded across the continent to also really focus on those diasporas that are also the breadwinners for the families back home in Africa. Last but not least, I do want to mention Tunes, because for me, Tunes is one of these fintech providers that are doing a lot of work in the background and may not always be recognized, but they are really that global interconnector, a super aggregator, as I call them, focusing more on the B2B, the back end, making sure that companies such as ourselves or some of the companies that you've seen in this presentation are able to move money in and out of the continent. And they do that by offering both inbound and outbound flows, connecting both bank accounts and the mobile wallet, and really focusing on that treasury services that we all know are vital to the success of any payments or fintech company across the globe, regardless of you operating in Africa or Southeast Asia or Latin America. So they are in 130 plus countries and are very, very active in Africa as well. And that's it, guys. Try to keep it to a half an hour. I think we're almost up now. And I want to leave you with this. I truly believe that the future is Pan-African. And if you look at some of the numbers that are coming out of the continent and the growth that will continue to happen across the continent, it's amazing. And you have currently 1.4 billion people, and the estimate by 2030 is that could be up to anywhere between 2 billion. So the future for me is really in Africa, but I've learned over the past year and a half working in Africa that it's got its challenges. It's got a long way to go, but in all honesty, that's also the fun and exciting part about it. So that's it. Thank you. And Vishal, I'll leave it open for questions.
Awesome. Thank you so much, Jonathan. Really, really insightful. I think except for dLocal and Flutterwave and maybe MTN to some extent, I didn't know any of those companies. So a lot of new knowledge for sure for me, and I'm sure for others as well. We had put up Slido for questions, so we have a few questions there. I'm going to just pop it up directly, and then I'll let you answer one by one and take it from there. So, or maybe I'll just help read through the questions, right? I think the first question is what everyone has, right? Because setting up an entity, processing payments directly, getting on board as KYC, it's a pain, which is how Southeast Asia started as well. Of course, things have got much easier in Southeast Asia. Still, MOR is one of the biggest businesses. But I think the answer to this is yes, but do you have any nuances to add here? Is MOR supported in many of these African countries?
Yes, is the short answer. And you do have a handful of providers that are specifically focused on offering merchant of record in a lot of these countries. As I mentioned, PowerPay is focused on the mobile money in 20 plus countries. You also have a company called Start Button that is operating in, I believe, between 12 and 15 countries, that is offering a variety of payment methods, both some mobile money and also bank transfers and cards. And then you also have other providers. There is a company called Presium Nova 42 in South Africa that has launched last year their own merchant of record model. So I would not be surprised if you continue to see more and more of these merchant of record providers that are popping up across the continent.
Yeah, I think that's something as expected, right? And the second question is quite good actually, because being in Southeast Asia, we have a similar challenge. It's like, oh yeah, we'll just go to Southeast Asia, and then you suddenly realize there are 10 different countries, 10 different cultures. I mean, similar to Europe, Europe also has different cultures, but somehow they were able to manage and create that European Union and a single currency. Is that something like that possible in Africa? Is there close bonding between the countries and the cultures? Tell us more about that and your experiences. And do you see a future where at least some of the countries come together and come up with a common currency, perhaps?
So it is already happening to a certain extent, but we're talking regionally, not across the whole African Union. And you see that in sort of the southern Africa region or Francophone Africa region, where you might have one currency, or in some cases you do have one local switch, domestic switch for multiple countries. But this is also, of course, what PAPS to a certain extent was created for, to bring together all countries and streamline a lot of those challenges. I think the biggest challenge is on the regulatory side. It is, for me, the biggest $1 million question. Can all of these 50 plus countries come together and agree on creating one set of regulations that can be used across the continent? And that for me is the biggest challenge. And I honest answer is I don't know. My dad has worked in Africa for the past 30 years, and he himself said, yeah, it's always been the biggest challenge is trying to get the governments to all pull together. And I mean, don't get me wrong, Europe as a union, but it's far from perfect. And it took a long time to get to where it is today. And still today we are having our own set of challenges. I think payments and fintech has been figured out, but other parts of the union is not really working so far, in my opinion.
I think a good segue from this same point is, those are the challenges which I felt in other regions as well. When you were at RDN, you also worked across LATAM and APAC. Do you find a lot of similarities between the regions or the continents, if that's a better word here? Or do you think it's, it's very different? There's the challenges everywhere, but they're different challenges.
In one way, there are very similar challenges across some of these emerging markets, where you have a lot of legacy infrastructure, and that has yet to be updated. And I debated putting it into presentation, but decided not to, because I didn't want to highlight how bad the experience is on this hosted payment page that you're seeing in South Africa. That's really sort of one experience that is very similar to other parts of the emerging market. And we talk about infrastructure, we need to talk about different levels of infrastructure, different types of infrastructure, because of course you have the tech infrastructure of the providers and the banks that in many instances have not been upgraded for decades. But then you also have infrastructures such as electricity. You have infrastructure such as Wi-Fi connectivity or roads infrastructure. I mean, it is challenging selling online if you don't have an address in some cases. So those are very similarities between the emerging markets that I have worked in. The differences, yeah, that's a good one. I don't know if there are too many differences that I can think of top of mind right now.
Okay, so I think now, after that comes back to cost question, and I see the next question is on the approval rates. Just your couple of cents and your advice on cost versus approval rates. Is it similar to other countries? The international versus local switch. I think approval rates is very clear because even many companies which work with Africa, they had to go to M-Pesa, they had to go to Verve, they had to go to the local rails in order to get more coverage. But what is your experience there?
Yeah, it all depends on the country and the provider, to be honest. In South Africa, it doesn't matter significantly if it's a local or international, meaning Visa, MasterCard, or ACI type of switch, because the rate is set by the PSP and the acquiring bank, and that is blended, and 99% of the time, unless you are the Mass Mart owned by Walmart, the Temu, the Take a Lot of South Africa. That's of course when you can negotiate. For the majority of it, it's blended, and the difference there is if it's an international card or if it's a domestic card, and if it's 3D secure or non-3D secure. So they don't really know which switch it's being processed via. But of course, there is a difference between the cost for the acquiring bank and the PSPs in this case, where the local switch is cheaper versus the international switch in this case. And you cannot in South Africa decide, or we cannot decide which route we want to send a transaction, because South Africa does not have a network per se like a Verve. In Nigeria, there is that opportunity, of course, where you can send cards that are dual branded to the different switches per se, but not in South Africa.
Maybe the next question, you can also introduce a little about NjiaPay and what kind of value it adds, bringing, obviously, if we are using, an aggregator or an orchestrator, the idea is to bring in better approval rates, easier integrations and all. And then how does NjiaPay help in all this? And with more and more layers in the payment stack, do you see the cost of conversion, etc., starting to hit the merchants?
Yes. So I'll take a step back. What we see in South Africa today is honestly quite scary on the success rate side. We see anywhere between 70, in some cases 65, but up to 75% on average. That's the success rate if you run one PSP. If you look at some of the more sophisticated merchants that are working with multiple PSPs, they are able to get it up to the more Western average, which is around 85 to 90. But if you just work with one, which 99% of all South African businesses work with, and you are leaving anywhere between 25 and 30% of the revenue on the table. And it's for a number of different reasons. What we are starting to see is quite some interesting data between the various banks and which PSP it is being processed between. We see anywhere between 5 to 15% difference on certain bins, depending on which acquiring bank or processing platform. We're also seeing these anomalies between, hey, we got refused insufficient funds, but then we retry it and it was successful. So those discrepancies are really actively happening in South Africa as well. And on the aggregation side, so that's more on the orchestration. On the aggregation side, the biggest learning from our side is all the PSPs have their standard integration that they're offering their clients. But we are now starting to uncover a lot of untapped optimization opportunities where we can send on a lot more data in the payment request, such as IP address, device ID, and we can also then decide if or we want to do 3 secure or not, because we know which PSP or which acquiring bank would approve it. And this is, of course, something a lot of the merchants do not know of or do not have the capabilities to do because they're not either PCI compliant or they don't have the resources. And that's also one of these learnings that most of the companies in Africa don't have the same resources as in the Western world, in-house internally. And when you want to expand outside of one country and want to go into multiple countries, that's really where the challenge lays, because now you have to implement multiple service providers, because even if Flutterwave claims to be operating in 30 plus countries, I can guarantee you that they will not be the best provider for you in each of those countries. And that's, of course, a challenge to know who is the best provider in each of the countries that you are working in.
And maybe this is, Jonathan, after that, you spoke a little about NjiaPay and what does it do. Does what you're building solve the issue of onboarding? Is it faster with you? Do you have like some standard agreements and standard SOPs which can be used to make this easier?
Short answer is not really right now, but it's something we're building, because it's we hired former colleague Dominic, who used to lead payments at a mobility scooter company in Europe for 5 years, and he also said one of the biggest challenges is really onboarding with the PSPs. So we are now working with a handful of them to try to figure out if we can do onboarding APIs, or can we collect information on our end that we know you need in order to onboard it. In all honesty, the biggest challenge is not the onboarding piece itself with the PSPs, it's the mid creation at the bank's end. So if you do work with the PSP and you do need that ISO model, that could take anywhere from 2 to 4 weeks, depending on the bank. PayFac models is, of course, slightly quicker, but it's still, for some of them, 3 to 5 days.
All right, I think you answered the last question, but this one. You spoke about zLocal and Flutterwave, and these are, of course, internationally well known, and there are more you spoke about later. But when it comes to auth rates or approval rates, obviously you exist so that you send the transaction to the best possible channel. Is a level of bin-based routing really vital in a country, in a region like Africa, or is there more to needs than that? I mean, is there more when it comes to doing best approval rate optimization, or working with a single provider is enough?
Working with a single provider is not enough. It's the short answer, regardless of which country you're operating in across the continent. Again, in South Africa, we see providers such as Presium and Stitch doing some great things on the back end, really trying to work more on the optimization piece. And it is also not always the providers who might have the best marketing that are actually the best back-end solution. And in some cases, it's also trying to figure out for that vertical and that industry, which PSP is actually the best suited for you. And that can be for a variety of reasons. If you have a lot of international consumers coming to you, do you really need, or do you have the capabilities to actually not offer 3D Secure on all credit cards? I mean, we all know that the United States are not using 3D Secure that often. So if you're selling into the US, you need to make sure that your provider are able to not offer 3D Secure to all customers. And that's really the challenge, again, in one market, but across the continent, it's tenfold to try to figure out who are those providers that are best suited for you versus that are most used or that are doing the best marketing. So in a nutshell, there's a big difference between provider A and provider B. And if you are interested, I'm more than happy to share our learnings in a one-off conversation versus a broader webinar that is recorded like this.
All right. I think there was one more question before I shut the Slido. It was, what's your plan to integrate with Ghana PSPs?
Which one, sorry?
Ghana, the PSPs from Ghana.
From Ghana?
Yeah.
So we are currently working with Paystack and Start Button in Ghana. So it's depending on the setup. What we aim to do is starting with the merchant record provider in most markets, and then enable a local provider if it is required. But 90% of our Pan-African merchants, it might even be higher, are not operating domestically in a lot of the markets that they are selling into, because they're mostly digital, so they can sell into that market with the likes of a Start Button.
Right. Awesome. So thank you so much, Jonathan. We are almost at time, and it was super interesting to hear all the insights. Sometimes with conversations like this, you do feel like you don't need to spend 3 years in Africa in order to learn all that. You just have to speak with someone who's lived there 3 years. So thank you so much for doing that. And taking the orchestration story forward, it looks like it's the first half of 2030s or 2020s was a decade of orchestrators, with so many popping up. And congrats to NjiaPay for being one of the first ones in Africa to do so. We also have Chi on the line, who's my business partner and co-founder as well for Travel and Payments, who is the team for So I'm sure there are some collaborations, potential possibility there. But yes, Chi, you have something to say.
No, I mean, I really enjoyed the sessions, Jonathan's. Really, really like knowing other countries, other continents, and all the payment methods. And I also realized that you have not mentioned anything about QR payments. And I was just seeing that is QR payments not popular in Africa compared to in APAC? Every single person, so every countries are in QR payment. But all of these are really interesting. And me as a payments fanatic, right? I mean, we get excited when we are talking about money movements, and really like to share with many of our audience about what's happening in different countries, and there's so much to learn.
Yeah, no, there are absolutely QR payments in Africa, and when I was putting together the various payment methods, I had to exclude some. QR payments is one, Snap, Scan, Zapier, but you also have voucher payments as well in Africa. It's just if you look at certain hosted payment pages in South Africa, for example, you'll see up to 15 different payment types, QR codes being one, of course, of them. And you also start seeing them in some coffee shops and cafes that are offering them. But as nerds, I always ask, hey, how many, especially as I started traveling, how many are actually using this? And it's less in some places than 1%. It's more if the connectivity is not working with your Yoko terminal, or your card is not working. That's when the QR codes are becoming then as a backup versus more of a preferred way of paying. So short answer is it has not ticked up as much as other parts of the world.
Right.
And yeah, I'm from Sweden, as Vishal mentioned. In Sweden, we have Swish, which is our Pix and UPI, and it's gone like this over the past decade. So now you can go into stores and just scan the QR code and pay with Swish, which a lot of people are preferring to do versus paying with their cards.
Yeah. All right. Yeah, really thank you for giving this very educational speech, and we're looking forward a lot more conversations, and welcome to the Payment Club.
Yes.
Thank you, I appreciate it. Well, we can do it too.
Yeah, it was a good way to welcome you to the Payments Club.
Yeah.
Great. Thanks for having me.
Yeah, thank you so much, everyone who stayed till the end. Really appreciate your time. And I don't know, if at all you feel like during the webinar through our audience of the Payments Club, please feel free to reach out to Chia or myself, and we'll be happy to host you. Thank you so much.
Thank you. Bye-bye.
Bye.